From Occam's razor, that was a 14th century Franciscan friar and logician who believed that we should keep things as simple as possible. Now, Einstein added to that everything should be made as simple as possible, but not simpler. And what we try to do here at chartingwealth.com is break down the market into as simple an element as possible. Actually, several elements to give us the overall picture of the market. We look at our Heikin-Ashi candlesticks. We look at our weekly vertical crossovers on the price percent oscillator. We throw in the derivative oscillator, some Bollinger Bands, a few moving averages, and we keep all of this as simple as possible, but not simpler. For those of you who are just getting to know us, I get emails all the time from people asking 100 questions, and I realize they just came to the channel. They know nothing about what we do. They don't pay attention to anything that I talk about on the show, and they want to know everything at once. I cannot help you do that. You've got to bring yourself up to speed. How do you do it? You can buy the book. You'll see a link in the show notes on that. But first, if you're listening right now, over the weekend, commit yourself to listen to a few trainings for free at the website, chartingwealth.com. Those who've been listening a long time, we can all use refresher courses. I was just rereading my book a few minutes ago. It's short. It's only about 60 pages or so. I boiled it down to give you the down and dirty, completely as simple as possible, but not simpler, and also a lot of motivation in there to you. But I wanted to explain important things in simple terms instead of going through all the complicated mathematics of what a price percent oscillator is, what a derivative oscillator is, how the market surges and pulls back, and all the complicated things we could go through. We break down in the book what you need to know. Explain the basics of understanding why we do what we do. And remember, folks, all we do in the end is we try to forecast. Is the market going up? Is it going down? Is the S&P, the Nasdaq 100, 20-year bonds, or gold, are they going up? Are they going down? You can apply the lessons we teach to any stock you're interested in, any commodity, any ETF, you name it, you can try to apply it. People say, well, does it work with everything? There's some charts that aren't chartable. You can look at them. You can look and see, does the S&P 500 cross over at any interval where it goes up over time or goes down over time that you can chart? And if the chart you're looking at does not do what the S&P 500 does, it doesn't do what particularly gold does on this beautiful weekly chart, what does it mean? It means it's not chartable. You're wasting your time. And if you're wasting your time, you move on to the thousands of other things you can chart. We chart 4 simple things because they're easy to chart. And people ask me, what about stocks? Why don't you chart stocks? Oh, I have before. The reason I don't chart them now is because I get plenty of movement with the S&P 500, Nasdaq 100, 20-year bonds, and gold. Why do I need to worry about a stock going through earnings and warnings, going through X dates where dividends and all the things that happen? CEOs get fired. Drugs that are coming out for pharmaceutical firms don't make it and the stock crashes. Any number of crazy scandals can happen. Why don't I stay with something that includes 500 big stocks? Tends to move in nice solid chunks as we can see over time. Does it always happen? No. But when the market starts to crash, we can see it. When the market starts moving up, we can see it. We can wait for weekly vertical crossovers and jump in and ride them up. That's what we do. And we do it again and again and again. Don't, my friends, make this more complicated than it needs to be. I go back to the simplicity rule of Occam's razor. Razor means principle. But Occam's razor. Keep it as simple as possible, as Einstein said, but not simpler. Now, with that said, let's jump into these charts. What do we see happening on the S&P 500 as the week closes? We have a red spinning top. First time we've seen a red spinning top since November of last year. So again, we're showing lots of indecision sitting right there on the weekly trend line. Weekly's not quite flat. And in fact, a lot of different things were happening over the course of the week. but we basically see that the price percent oscillator still heading up a little bit. Derivative oscillator has lost momentum since the first time since it bottomed out back on the 28th of December 2018. So after 8 weeks of solid up movement, we've seen a bit of a hiccup. Does that mean the markets are crashing? No. It just means that things slowed down. Could be turning over. We look at the 2-day chart, still didn't end the week rotating over. Well, maybe so. God, that's hard to see. Perhaps it did. You know what? With that latest fully drawn big down candle, we will go ahead and call that, because I can just barely see as I zoom in that there was a crossover at the end of the day on Friday. So we do see a vertical crossover, and we will go ahead and put a 2-day crossover in there, and we'll just see how long that continues. Remember, that typically has to happen first. The intermediate wave has to cross over going down before the weekly wave can do so. We'll go ahead and call that a crossover, and we'll go ahead and rotate our arrow. Those of you who are watching on video can see how great freestockcharts.com and the paid service TC2000 are. People also write me all the time asking me what type of trading software we use. And of course, it's in our show notes every day. We have a discount if you subscribe, $25 off. I love these guys. I actually know the creator, Chris Warden of freestockcharts.com and TC2000, and it is just phenomenal. I love it. And of course, it has things that other people don't have, like Think and Swim, like the price percent oscillator, as I've been asked by folks who can't seem to find it. Very similar to the MACD, just better. We talk all about it in trainings on the price percent oscillator you can find, and in the book. Trainings are all free at the website. So we see that the 2-day chart, the price percent oscillator is crossed over. Derivative oscillator is not quite crossed over yet. We'll see if that happens. Could open up on Monday with an up market. Might see this crossover pull back, bounce off the red signal line, and start going up. That can happen. If that does happen, we'll just redraw it. Okay, what's up on the 4-hour chart? Down in the morning, a little bit of recovery in the afternoon. We're still down 0.20%. Looks like the derivative oscillator is about flat. Price percent oscillator staved off a little bit more of that down move with that up move in the afternoon. So not going down quite as hard as it was. Again, don't have a trade until we see the 2-day chart moving in the same direction as the weekly. Means that our trade is off on the S&P 500. So we go from the 4-hour back to the weekly. We go on to 20-year bonds. The Nasdaq 100, as represented by QQQ. Now, in this, we don't see as much indecision. We have a spinning top, a red spinning top. Not as much indecision as we saw on the prior chart. Pretty close. We see the derivative oscillator losing momentum. Price percent oscillator going flatter, not flat yet. Again, doesn't appear to be anywhere close to a crossover going down. If there's a crashing next week, well, of course that could happen. But again, most crashes occur in the month of October. In fact, all of them have occurred in the month of October. Didn't happen this October. Could it happen? Sure, anything crazy can happen. So what we see going on now is, again, a slowing down of that super strong up move we've had for these last 8 weeks. We see that the 2-day chart has not crossed over on the Qs. It did push through. Of course, this latest candle dropped through the 2-day trend line and quickly followed, dropping through the weekly. That, again, is some strong down movement. Solid red candle with a wick on the bottom. Maybe crossing over on Monday or Tuesday, but hasn't happened yet. So, again, we'll continue to watch what's happening on the 4-hour chart. Very similar to the S&P 500, down in the morning, a little bit of a recovery in the afternoon, pushing through immediately, just slamming through that weekly trend line. So that's where we are on stocks. Again, the Qs could have a recovery. If you saw a big bump up in the morning, that would, of course, mean that if the 4-hour crosses over going up and the 2-day chart doesn't cross over going down, which it wouldn't if the 4 hours going up markedly, then you could have a jumping in point sometime early in the week if there's some significant up movement. We'll watch for that. Not really expecting that, but we'll see what happens. Remember, we're trend followers. We don't care what the market does. We don't care if it goes up or down. We just care about whether or not we can find a trend that we can follow. And we look at 20-year bonds and we see we don't have a trend we can follow. Why? Because the chart is still up for the weekly. And when we look at the 2-day, we'll see where it is. It's been down, but of course, pushed through over the prior week, going down, a little bit of up movement over the course of this past week, up for the day 0.42%. We have a green spinning top, indecision tending up. Price percent oscillator didn't do what it looked like it would do earlier in the week, and that is crossover going down. So we don't have a weekly vertical crossover. Derivative oscillator, however, did crossover. We look at the 2-day chart. And of course, this latest candle, nice big green open box up candle, strong movement up. Not enough to cross over on the 2-day chart. Derivative oscillator losing downward momentum, pushing through, of course, that 2-day trend line. Doesn't mean a whole lot to us right now because we've got the 2-day going down, weekly going up. We can see, again, strong continued up movement on the 4-hour chart for 1, 2, 3.5 days. And again, derivative oscillator gaining upward momentum, price percent oscillator heading up. We'll just continue to watch and see how bonds sort out. Don't have a trade at this time. What about gold? What I told you to watch for, we'll see when we get to that 4-hour chart. Talked about a potential bottoming. Gold up for the day, 1.09%. Big up day for gold, although it was still a down week. Big red down candle with a wick on the bottom, no wick on top, means strong down movement. Price percent oscillator heading down. Thought it might cross over by the end of the week. Didn't happen, particularly based upon what happened on today with that 1+% up move. Derivative oscillator still oscillating down. And again, price percent oscillator still heading down. And again, a week that really pushed through strongly the weekly trend line, still though in a confirmed up move. We go to the 2-day chart and we can see that the latest 2-day candle was an up candle, still a big long wick on the bottom. For strong up candles, of course, for our Heikin Ashi candlesticks, they are open box green with a big wick on the top. This is a weak green candle. But again, on this 2-day candle, still up. Derivative oscillator gaining downward momentum. Price percent oscillator not heading down at the same strong angle it had been before, but still headed down. And of course, now that since we still have the 2-day headed down and the weekly headed up, we don't have a trade in gold. We were hoping, those of us who were looking at it were saying, hey, if it crosses over going down, we might, on the weekly, we might have a nice trade. Didn't happen, so we'll just keep our powder dry, pay attention. Now, this is what I was talking about. Remember earlier in the week where I was saying, look, gold hit somewhere around 121 or so, 121.23. What's it going to do? It keeps hitting about the same point, sliding sideways. Is that going to be a floor? Well, it was as of today on Friday. Popped up in the morning and then about the same in the afternoon. Derivative oscillator gaining upward momentum. Crossover on the 4-hour chart going up. Now again, this is our smallest chart. What does this mean? Don't know. Might just pop up a little bit and then roll back over going down. We'll continue to watch until we have a shakeout with the weekly and the 2-day. We don't have a trade in gold. But remember, what's so beautiful about gold is that weekly chart. It is decidedly, the price percent oscillator is heading down. Doesn't mean it's going to stay heading down, but if we do have that crossover, as we've seen in the past, gold is a beautiful weekly chart. So we'll just wait and see what we see, learn what we can learn, follow trends that are established because they tend to go in that direction. Hey folks, we love to hear from you. Don't want to discourage you from sending your questions, but again, for the beginners, please read the materials we have, watch the videos that we have, listen to them, sit down with a notebook. We call it our trader's notebook, and take notes. Note things, write them down. The stuff that you write down is what really sinks into your mind. We were going over that principle yesterday about things that are analyzed and documented, about how the knowledge tends to increase exponentially. Very important, I believe, That's the reason that we print our book. We don't provide it digitally. That's the reason that we encourage you to use daily market, weekly market, and trade worksheets. We actually have trainings on how to use those too at the website. So again, please subscribe to chartingwealth.com. Get our daily reviews and our once-a-week comprehensive review and forecast. Also, we got special trainings that we sent out this week to you. We have those that go out to our friends and folks. And of course, if you really want to support us, Patreon sponsorships, most appreciated. We have special trainings for you every month. We will review the stocks and ETFs you're interested in, plus have our Q&A. Plus, we share with you things like our Bitcoin chart training, our short chart training, and our quarterly chart training. God bless, my friends. Thank you for all you do for us. We hope you appreciate what we try to do for you.